Hello, everyone. Welcome back to Sudden Wealth. It's a pleasure to be here again. I apologize for not posting yesterday, but it was a very hectic day. It was actually a fairly quiet day in terms of news. The ECB did hiked again by 25 basis points, but they are very behind the curve compared to the Fed. In any case, as I've been saying, a bit against all the narratives that you see out there, is there's still too many people bearish. There's still too many people waiting for the rollover in 2023, for the confirmed recession, for the upcoming depression, all this kind of negative expectations, and that's not how the markets tend to roll over. Now, I do agree with most of the reasoning behind it. It's just a matter of psychology. If you have huge numbers of people on the sidelines waiting for the crash, then it's very unlikely that it's going to happen. You need everyone to be in the markets. You need everyone to be extremely bullish. You need everyone to, come up with all sorts of reasonings of why these stocks will 10x, why will the S&P double from here, why this kind of narratives is what you need. You need Jim Cramer on CNBC saying what they say was the US economy has never been stronger. It's like a machine, right? When you see things like that, that's the time probably to consider selling. I do believe this market has some more legs to go up. Please bear in mind, no market goes straight up without any pullbacks. But as long as things keep fairly stable, this is actually in general bullish for the market. Now, as I mentioned, and I've been proven right so far, a pause and hold by the Fed is more bullish than rate cuts. Like everyone is awaiting the rate cuts. I don't think that's very bullish, at least in the first 6 to 12 months, for the reason that if they're cutting, that means that the economy is weak, and apparently we cannot endure higher or a bit more normal interest rates. But if they manage to raise rates this quickly, and we manage to a certain degree, have a decent, some decent numbers coming out, and they don't need to cut, that actually is more bullish because it showcases a higher resilience from the economy and also the markets, of course. So I do believe I'm in the minority camp. We'll see who's right. But I do believe that as long as people remain overall bearish, we're not going to see major crashes. Can we see a 5%, 7% correction? Can we see a 10%, even a 10% correction? Sure, very possible. Will we see a 40% crash in 2 months? No, unless you have a huge scaling of the Russian-Ukraine conflict or China with Taiwan. Unless you have something of that nature, I do not believe that is likely to happen. Now, there's still a bit, if you will, the canary in the coal mine, which is commercial real estate. I don't think it will be a major factor until Q3 2024. Reason for it is that's where the majority of the debt held by these larger players is due, meaning they will need to refinance at higher rates. So, but it all depends if the Fed can come up with a liquidity line just for those in order to keep them afloat and probably force some sort of consolidation. Now, look, I don't think that's a good thing. I don't think the Fed should be in the business of saving companies or micromanaging the economy to any extent. I'm just saying what I think may happen in case things get a bit out of hand. I think what you've been seeing in the past 13 years is a heavy debasement of currency. And it's amazing. You can actually see, if you track the money supply with the S&P 500 performance, their correlation is above 99%. I mean, that's so when people say, oh, when they debase the currency, where is it going to? Yeah, just check just check the S&P 500. It's very simple. And yeah, it's a disgraceful of a policy. I think it will have a lot of long-term pain. I do believe some of the smarter politicians, they know they will never repay the debt. They know what they've created is unsolvable. What I believe they are doing, this is pure speculation. I think they're trying to buy time for the potential of AI to be in everyone's life. I think if things go well, the bump in productivity can be so high that it will somewhat, to a large degree, compensate a lot of the mistakes made in the past. It's a huge gamble, but it's like a last resort kind of situation. So please keep this in mind. Markets and economy are not the same. They've not been the same for a long time, and they rarely are the same actually, even if you go a bit further behind. In any case, I do believe the US is not as bad as people may think. Europe seems to be stabilizing. Where some of the issues have been popping up actually have been in China. They're back to stimulus, in case you haven't noticed. So let's see what's going to happen, and I'll keep you posted. I do believe that we are on probably we need some pullback here. I mean, this has been pretty vertical, which is also not very appealing. But in my opinion, this is incredibly dangerous to short this market, because this can last much longer than it can remain solvent. Never forget it. Guys, if you actually like my content, please consider dropping the like and subscribe. That would actually be very helpful. And see you in the next one.